On July 5th, Greek voters overwhelmingly rejected a Eurozone deal that would have reimposed strict austerity measures on Greece. The Eurozone is a monetary union of 19 European countries that controls the money supply of the euro. Following Greece's referendum, an emergency summit of the Eurozone's 19 finance ministers was called to consider whether Europe will provide additional financial relief to Greece. The outcomes from this emergency meeting will be crucial to the future of Greece and its continuing membership in the Eurozone. Here are 3 questions that need to be addressed between Greece and the Eurozone. First, how long will Greece stay solvent in the short term? The European Central Bank must address the immediate liquidity needs of the Greek banking system. On June 30th, Greece defaulted on a €1.5 billion payment to the International Monetary Fund. A €3.5 billion payment is due to the European Central Bank on July 20th. Greece is very short on cash. Banks are closed and withdrawal limits have been placed on ATMs. The country is expected to request more short-term liquidity funds from its Eurozone partners, while it continues to seek a long-term deal. Second, what is Greece's ultimate future in the Eurozone? Greek leaders claim that they want to remain in the Eurozone. However, frustrations amongst other Eurozone leaders are growing as Greece's government continues to resist demands by its creditors to reduce government spending and honor its debt obligations. Both German Chancellor Merkel and French President Hollande have clearly stated that any negotiations requires fiscal reforms first. If Greece doesn't make changes, it may be forced to leave the Eurozone. Third, how can the Eurozone learn from Greece's failures? The structure of the Eurozone is unique. On one hand, there is a unified monetary policy amongst the various countries, which controls the money supply. However, there are 19 different fiscal policies determined by each country. These unique fiscal policies determine how much each member nation government collects and spends. If the Eurozone is to prevent any country from heading down the same road as Greece, it may take a hard line against countries that don't adhere to its austerity programs, sending a strong message to other debtor nations. All eyes are on how the Eurozone will respond to Greece's situation, potentially setting a precedent for other Eurozone countries who face similar debt problems.